Yesterday, the market faced, some would say, the doomsday scenario of there was no blue wave, or there is no blue wave. Today, we seem to be embracing, in the past 24 hours, we're literally hugging divided government for risk. Does that add up for you? Is it correct to really be pro-risk in a divided government scenario?
No, you're right. I mean, I think the price action where it's completely natural is that US yields are dropping, right? And you also see slightly weaker dollar, which makes sense. But you're right around the stocks. I think it is because the market is saying we are probably not going to get this tech regulation. And I think that's the reason why we have actually seen tech outperforming, because there was a fear of this blue wave. And then, of course, you have cyclicals and financial underperforming if you look at S&P, right? So I think that explains it. And then that you still have maybe also expectations that Fed is going to step up in terms of the QE program.
I have a question on bond yields. Madison and I were talking about this top of the show. When I came in yesterday, we were at 90 basis points on the 10-year. Today, we're at 73 basis points. Absolute wild swing on the 10-year paper, something we haven't seen since the pandemic hit in March. Where do you see bond prices going from here, given this divided potential government?
So I said if you had this divided government, which it seems the most likely scenario now, the 10-year should go to 65 to 70 basis points. So that will still be my target. I think what is maybe combined with this, because it's not because we're not going to get any stimulus, is also maybe expectations that Fed could step up buying. And that will also temper, at least initially, how far the 10-year is going to go to the upside, right? So I think yields are going to head lower. I think they have more room to the downside. So let's say, 65, 70. Will still be the way I will be thinking about it.
And you could literally say that the 30-year paper asphyxiated yesterday by 18 basis points when he said he was going to the Supreme Court. Let's extrapolate this forward to the Fed. They're going to make the noises that they want a fiscal deal. I'm now hearing people say to me, the Republicans offered $500 billion before the election, and that's when they thought they were under pressure. You could look at something very, very skinny, and that fiscal void and fiscal narrative is a bigger risk that we're not discounting enough.
Yeah, I would say you can say the Democrats said 2.2, right? And you're completely right. The Senate, Mitch McConnell says 500. So let's say we get Biden and the Senate Republican. I think we'll be a bit above 1 trillion. So if I should put a number, maybe 1.2, 1.3. So obviously much less than the slightly above 2, but clearly more than the 500 billion. And I think actually both parties want to do a deal. So I don't think it's that bad, but it's only going to happen most likely in Q1, and it's clearly going to be smaller, and that is what the Fed doesn't like.
You talk about in your note that if Trump wins and Senate's Republican, stocks go higher. If Biden wins and the Senate's Republican, stocks go higher. Where in stocks are you looking at? Is it, if it's Trump, it's going to be growth, and if it's Biden, it's going to be value? Are you rotating?
Yeah, I mean, it's a good point here, right? Yeah, it's a good question. So it goes higher no matter what. But I think the difference is clearly, I mean, if you have a Biden win, if he had a blue sweep, for example, right, you would have some pressure on tech stock. I think that's fair because of fear of antitrust regulation. On the other hand, you would have as you say, the value stocks, right? So now because you will have banks performing better, because you will have yields going up. Now you're somewhere in the middle, in the sense that I think if this scenario, the tech stocks are not going to be hit to the same extent because the Senate is going to go against that. On the other hand, the value is not going to be supportive from you can say, higher yields, right? So it's actually a little bit back to the same trend of tech doing relatively well and financials and also cyclicals doing relatively poorly compared to a blue sweep. But all, I think we'll go back and focus on the vaccine and the virus, let's say in a couple of weeks' time, and then stocks is going to head higher again.